Hello and welcome to another episode of the Statesman Talk with me, Deepti J. Verma. Today we are being joined by Monika Halan, who has been on many committees for SEBI, is an author, a journalist, and an economic advisor. She works in the space of financial education and gives better money making advice, I think. She's written a book also called Let's Talk Money.
Several books, actually.
Yeah, several
Yeah.
books. And that is that the most
So
latest?
Let's Talk Money is the first. Let's
Yeah.
Talk Mutual Funds is the second.
Okay.
And the third, which came in 24, is Let's Talk Legacy. So they're all aimed at helping
People make
average
better.
middle class people, just
Yeah.
make better, get financially educated, something
Yeah.
they don't teach us in schools and colleges.
Yeah.
Just essentially empower themselves to navigate this very frightening financial landscape.
It is actually because, even when it comes to podcasts and like we don't know what questions to ask because somehow every time you hear the word
Yeah.
economics or finance,
Correct.
we feel we don't feel we have the tools to ask even the right questions. So
Right.
we'll try to simplify
Absolutely.
the conversation today.
And that's exactly what I do. So if you read my work, the whole idea is to say these things are not that difficult. They've been made difficult. People use jargon so they can hide behind these big terms. If you're a doctor, lawyer, professional, you have done the work, you're reasonably intelligent, why will you not understand this part? So I basically simplify. So my work actually will appeal to anybody who will spend that half an hour required to go through a piece.
You have your own podcast also on Spotify,
I do.
right?
That's right.
That's
Audio
like
only.
bite-sized.
Very small,
Yeah,
15 to 20
yeah.
minutes. I will pick up something which is trending, like a news topic, which has some relationship with our financial lives. Maybe it's the RBI and their monetary policy, or it's the budget, or there is a market crash or a market, something has happened, which is people have questions and there's nowhere to answer.
That's
So I
true.
will describe that, and then people write into me with their questions.
Oh,
Okay, so they will have
so a two-way conversation.
yeah, so then I will answer that. Somebody has an investment question, somebody has an insurance question. I don't do portfolio advice, so I've been very certain that I don't want to get into this narrow thing of maybe having 100 or 500 clients. I see my work as far vaster than serving a narrow list of clients. So I restrict my work into financial education. So through the podcast.
But is that smart
Financially.
financial decision?
Yeah, so I can make much more money. And although I write and I talk about money, I think we all need to realize that money is not at the top in terms of what is it that matters to you. To a lot, after a certain threshold has been reached. Okay, so let's all agree that you need a basic threshold.
Yeah.
After that, there's a concept called marginal utility in economics, which is to say that every additional unit of something gives you lower satisfaction after the peak has been reached. So suppose you're eating chocolate. The first is great, the second is good, the third is okay. And after a while, you don't want to eat anymore. It's called declining marginal utility. Of the extra unit you get, you don't get that satisfaction as the first unit did. Money is no different. Of course, you need it when you don't have it. It's so important. After a certain amount, every additional lakh will give you it. That doesn't really matter. What matters is meaning in life. So when in my context, of course, I can just serve a few clients
and make more money.
But for me, that's not it. Okay, money for me is a means of doing what I want to do. This is what I want to do.
Freedom, maybe.
It's freedom. It's what I want to do. It's not being dependent on an institution for salary or work or favor. So it allows me my independence. I can write what I feel without fear or favor. That's what money allows me to do. So when I have a column in Hindustan Times, so pretty much I will write what I'm convinced about. I will support it with references and facts and figures. But nothing or nobody will stop me from writing what I want to write simply because I'm not dependent on anybody for fear or favor. Yeah. So that's what money allows you.
That's the thing that we should all maybe aspire to. Freedom.
These are individual journeys. Look, again, I don't At
You,
no
you met
point,
people who just enjoy making money for
yeah,
money,
and that's
right?
great. As long as you accept that this is what gives me joy,
Hmm.
please make more,
Hmm.
right? So my route is works for me, your route will work for you. But as long as you're conscious about what you're doing,
It's
I
true.
think that's what really matters.
Okay, coming back to, as you just said, that we're not given financial education when we are younger in schools. Um, how important do you think that is? What can schools teach young kids, like maybe around the age of 13? And also, do you think the legal age to trade can be lowered? What do you think can happen in that space?
So trading is not investing. I
Hmm.
would hesitate very much to lower the trading age.
Okay.
That's not where we want to push our young people. In fact, we want to take them away from trading into long term investing. As far as education in schools, I think they need to start at 10, 11, 12, whatever age. Maybe just start with basic concepts. What is, we used to do these in maths: present value, future value, time value of money, all of that. All of these are personal finance concepts. So they are being taught, but they may not be taught in the manner which relates to our lives. So I think
For
they're
practical
beginning.
use.
Correct. What
Hmm.
is the, if your grandmother is talking about how 100 rupees used to run her house, why is it that 100 rupees today will not buy you much other than maybe two, three loaves of bread? Because of inflation. What is inflation? What does it mean for you in your life? So by the time you are 20 years later, the 25,000 or the 50,000 or the 2 lakh that you're spending today, what will be that you will be spending in 20 years? Because inflation constantly will reduce your purchasing power. So if you're spending 50,000 today, maybe you'll be spending 2 lakh in the future for the same basket of goods. Right? So those sort of ideas that you will need more in the future, even if you don't increase consumption, simply because money loses value. Those are basic things which children must be taught. And I think a lot of schools are introducing an optional course
Okay.
of just basics. A lot of colleges have this one paper on personal finance as well. So I think it's beginning.
And when you said that they should be encouraged to do long-term investing,
Yes.
what does that mean?
So we need to understand that there are different parts of the market. So there's a part which is on speculation and trading, which is day trading and futures and options.
Stock market.
So stock market is an umbrella term.
Hmm.
Within the stock market, there are different ways to access it. Okay, so one is when you trade, you are punting on the stock price in a very short period of time. It could be at the end of the day, it could be end of the week, end of the month, end of 6 months, whatever. So these are, you are punting on the price going up and down short term. That's purely speculation. Speculators have a role. Retail investors should not be speculators. You need to invest. And when I say when you invest in the stock market, it means that you're buying a share of somebody else's business. So if there are companies listed, all the big companies that we know of, Reliance, TCS, HDFC Bank, all ICICI Bank, uh, Infosys, these are large companies which are listed on the stock market. What does that mean? It means that they have shares available for you and me to buy. Why am I buying it? Because I want to participate in their profits.
Yeah.
As an entrepreneur, why do you set up a business? So that you can earn a profit, or I can earn a salary. But as a salaried person, can I participate in somebody else's business? You do that through the stock market. So, one way for retail investors is to participate directly through buying individual shares. And why do you buy them? So that over the long term, which means at least 10 years or more, you have the ability to participate in the profits, and the share price goes up because the profits are going up. There's growth in the company. Another way for retail investors, which I recommend, is to go through something called a mutual fund. So when you buy direct stocks, the risk of that one company doing well or bad is very high, right? So that one company risk is very high. An average scheme of a mutual fund will have 30 to 50 to 80 stocks. What is the probability that all 50 stocks will go to zero?
Very
That
less.
probability is zero.
Zero.
Okay, it cannot be unless, if there's a nuclear war and we all die, then it doesn't matter, right? But other than that, so for a retail investor, if you want long-term growth of your money, the way to do this is to invest through mutual funds, which give you the vehicle, which is, again, regulated by SEBI, very tight regulations. I've been part of the regulation committee process, which ensures that retail investors get a fair deal. So then you access the market for the long term through a mutual fund. Mutual funds will also invest in stocks, bonds, gold, silver, real estate, combinations of these. So you have to really learn before you step into the market. When people think of the stock market, they think it's a lottery, it's a trading. It's not that at all. There's a science to it. There's a way to grow your wealth long term using the stock market without having to look at the market every day, which is what I talk about in my books. That for an average professional, you're a lawyer, a doctor, you're a scientist, you don't know how to read balance sheets. You don't know what the price earning ratio, PE ratio, you don't know book value. You don't know these technical terms. What are you doing buying direct stocks? You should not be doing that. Like, you don't know how to swim and you're going into the sea. How? Why?
It's like gambling then completely.
So you're buying on tips, you'll lose your money. So there is a way to build your wealth long term using the stock market if you follow the rules. That's what I basically teach.
And that's what you've talked about in
Let's Talk Money, Let's Talk Mutual Funds. So Let's Talk Money is your basic foundational building block. So people get to investing immediately. There's a whole process before you get to the stock market. You've got to secure your present, no? Stock market is for the future. But what about today if I have an emergency today? So the Let's Talk Money will tell you how to build your cash flow system. How do you separate your saving from your spending? It's just a very simple thing, but it's transformative for every family to just separate your saving from your spending. And I can only recommend you read the book. Then you build an emergency fund so that your present is looked after. If there's an emergency, then you buy medical and life insurances. So you are putting seatbelts on your position today. Now we have money available to invest for the future. So in my book, you get to investing in a much later chapter. People are beginning from the investing decision without learning how to swim in the shallow. So it's a very gentle, easy, hand-holded approach to get you to the stock market, to say, now maybe you're able to take this risk because I've secured your present now. Now we will still take the safest route in this market to give you an average market return.
And that is mutual funds, according.
And in the mutual funds, there's a category called index funds. There's a whole logic to why index funds, low cost, average market return. For a new investor who doesn't understand all of it, what is the safest way to approach the stock market? Through an index fund on the Nifty 50 or the Sensex. These are basic building blocks. Only when you understand that. When you start doing active funds, so there's passive funds and active funds, then you get to the deep end. When you have the ability to select mutual funds, there are over 10,000 options. How do you even begin selecting? People will select on tips, and because last year's winners they will buy. You will lose money. So I'm just giving you like a safe path through this very complicated ecosystem where there's a lot of sharpshooters just waiting to get your money. They will put you into crypto, they'll put you into some multi-level marketing nonsense, they'll put you into small caps, they'll put you into all things where they may make money off you. My whole idea is to empower you so that you don't make a multiplier, but you
don't lose at least.
No, you don't lose in an FD also. But I'm going to give you returns which are inflation and tax plus. That's it. So it'll keep your head above water. Inflation, taxes, of course, sit on everything. And again, if you have a life cycle approach, if you are doing this for 10 years or more, and there's a whole logic of why 7 to 10 years, then you will build wealth in a country like India, which is a growing economy. Okay, so it's linked to GDP growth. What is GDP? GDP is the value of output of goods and services. Who makes them? Companies, firms, informal sector. That growth is reflected in the profits of companies. Those profits drive the stock prices. It's not as if it's a magic wand that market is happy, so prices are going up. So short term, yes, but over the long term, the stock price is reflective of the fundamental strength of a company. Okay?
And hence the fundamental strength of an economy.
Of the economy, right, correct. Because finally the economy is run by all of us, of the work that we do. And the large companies are reflective of what the overall business activity is. Therefore, when you think of this thing called the Sensex, it has 30 companies which make up the index. So again, if people want to understand this concept of an index, we know what the consumer price index is, no? That there are goods and services which are in the index, which means, let me give you an example. If you go out to buy, you're spending 200 rupees on bread, milk and eggs. And after 6 months, you see this 200 has become 300 and this 300 has become 400. Will you not say prices have doubled? This is a simple price index on your consumption basket. Similarly, there's an index on the stock market. So 30 stocks on the Bombay Stock Exchange and 50 on the National Stock Exchange, they make up the two big indices in India. These are India's 30 biggest, most mature companies which sit in the Sensex. Likewise in the Nifty 50. And these companies don't stay static, because as new companies come, some of the old ones are thrown out and new ones are brought in. So if you simply buy this index, at every moment you're holding India's best companies. Okay, so that's
the public knowledge, obviously.
It is.
Yeah.
You
spoke briefly about crypto, that people are tempted. Please explain to us, what is cryptocurrency? Now I believe like a Melania coin is also out, and this coin, like, how does it actually work?
It doesn't.
It doesn't work.
No. So look, what is a share? What is a stock? It is a share in somebody's business. Right? So suppose you have this studio and you own it, and somebody wants to participate in your business. Maybe you will give them 5% of the business. So now they own 5% of the share. So if you make profits, they will make 5% of the profit. If you make losses, they don't get anything. Their capital is eroded. Similarly, the stock is, there's an underlying business beneath this stock that you own of a company which makes goods and services. When you think of a bond, like debt funds, bonds, there's an underlying economic activity of a borrower and a lender. And then there's a price. Interest is the price of that loan, and then you trade. Okay, so that it gets into secondary market. There's an underlying business to all this. There's an underlying value to all this. A crypto coin is a digital token on the blockchain. Blockchain is not new. Me and a lot of people in finance, the old school I call us, we don't know what the underlying is of a digital token. There is a price because there is a demand. It's a supply and demand. Why there is a demand is because a hype has been created about it, and they think that the old system of currency and all that is obsolete. But for this thing to have value finally, it should replace currency. Only then will it finally have value. They are saying it's a means of transaction or a store of value. But the value is only coming because there is demand. Suppose the demand goes away, because there's no underlying business activity on this.
So basically, it's not solving a purpose.
It's not solving a purpose at all. You're right.
So once the hype dies.
So let me just finish this argument. And they say that gold is exactly the same. Because there is a demand, there is a price. And as the demand keeps increasing, the price keeps going up, right? So they liken a Bitcoin to gold. Why does gold get value? One is because we wear it as jewelry, and especially in India, we keep it as a store of value. But where is it coming from? It's coming because all the large, viable countries of the world have reserves in gold in their central bank. Like we have RBI, they have a Federal Reserve. They have a basket of currencies that they keep. They also keep gold. You would have seen headlines of RBI is getting our gold back, and we had to pawn our gold in 91 crisis because we were bankrupt. So our gold reserves were pawned. So the countries are using gold as a reserve.
Yeah.
The day a US or a India or a UK or a China starts to use a cryptocurrency as a reserve, that's the day it becomes an asset. Till then, it is not an asset. It is pure speculation. It is pure lottery. I can only tell people who don't understand basics to just stay away. Don't do it. Even the billionaires of the world don't put more than 1 or 2% of their total assets in this. You are putting all that you have. If the itch is very high, then maybe take 5% of your total investment and use this as a lottery. Don't put all your assets
And
into
even
it.
crypto is of various kinds, right?
There are thousands of
yeah,
coins.
exactly.
Yeah, so what are you buying?
Yeah, buying.
And who are you buying from? These are unregulated entities. All the exchanges are unregulated. So there's a regulated part of the market. You're going to trust one individual who set up an exchange.
Yeah.
Going to park your money with him. And you're going to buy this thing which we don't know where this goes. So a coin like a Bitcoin.
That was the first,
Now has become, like there is now trading happening through a stock exchange because it's become part of a exchange traded fund. Okay, so there is you can
some
see
legitimacy.
Yeah, so you can see through regulated entities there's a way to onboard this. But for all the other coins, just don't do this.
Aren't we supposed to print the currency dependent on our gold reserves?
No,
Or
that
can we-
used that
that
has
used to be
that
before?
train left the station in I think 1971.
That
The
was,
world went off
so
the
now
gold
we just
standard.
print currency.
Yeah, so
as in when we.
yes, so there's a certain so you will print more currency usually when the government expenditure is larger. So for example, when COVID hit, every country had to spend to get out of the problem. That's the time I think the whole world printed currency, which is why, so when you have too much money in the system, you have too much inflation. Basic tenet of economics is prices will rise if there's too much money chasing the same goods. The supply of goods and services is the same. Now there's more money in the system. So the price of goods begin to go up, which reflects as inflation. So if you noticed, COVID hit, governments printed money, and then we hit very high inflation. It's begun to come down. 22, 23, we saw extremely high. So India was actually protected. Our RBI did a fantastic job in that time. Absolutely fantastic. Inflation rates in the US, I think, went from 0.5 or I don't remember. It was sub 2. They went all the way to 10. So there was a multiplier. We were...
But how did we manage them?
RBI, we're conservative central bank. We also didn't print. So I don't know if you saw the headlines during COVID, there was so much international economist pressure on India to spend 10% of our GDP that time. We didn't do that. Ministry of Finance played such a good role that time. We spent what we had. We spent on free food so that we didn't have a single starvation death during COVID. 800 crore people are still getting free food. So we did not print our way out of the crisis.
Okay.
So there was a very conservative and very prudent team in the Ministry of Finance during COVID, along with the very conservative, prudent, mature RBI. I don't think Indians really realize what a role that both played to get us out of that. Our inflation rates never went higher than, I think we hit 8%. Again, my numbers may not be, except that it didn't go that far. The West saw multiplier inflation rates. We did not. Inflation rates are still slightly high, but it was very well managed. So, yeah, I mean, just that So again, I think economics is important because people also should understand what happened. It's very easy to throw eggs at the government and the RBI, but I think what they did in that time, and we saw how the other countries struggled with just very high rates of inflation and other problems which came with that.
What do you think of the finance minister? She keeps getting a lot of flack for, increased taxation. Like we,
Yeah.
as a layperson, we only bothered about tax, right? And we think we are heavily taxed. As some of the speeches in the parliament also, they said that we get taxed at every level.
Right.
Do you think that's right? Do you think that can be fixed? What is your view of
There's
it?
a legacy problem. I think Finance Minister Sitharaman has done a very good job overall. Yes, when you look at what does very good job mean? It means that um, you have, so the government borrows, the government revenue is not enough for the expenditure. Every government borrows. Okay, it's called deficit. So these are technical terms. But deficit, what is it? It's just that my income is not enough. I need to borrow to spend.
Okay.
That's that amount of deficit. Now, this deficit has to be kept under control, otherwise it balloons. It causes a lot of other problems. When you borrow as an individual, does it matter that you're borrowing to buy a new phone or to buy a house? I mean, bad example because the prices are different.
Yeah.
But essentially, are you borrowing for consumption or are you building an asset from the borrowing? Which is a better loan? You tell me.
I guess building an asset, obviously.
Absolutely, right? Okay. Governments are no different. What are they borrowing for? Are they borrowing so they can give more subsidies, they can give more freebies, they can spend more on consumption, or are they borrowing to build assets? So what this government has done, it's something called capital expenditure. Okay, like when we take a loan to build a house, we've done capital expenditure. When I use my credit card to buy dinner, it's a consumption expenditure. I borrow to eat. One is that the borrowing levels have remained really under control, other than the COVID period, which is fine. This borrowing has largely been used to build assets. What are the assets? Roads, railways, ports, bridges, which are very visible to us to see. When we drive, we see the central projects are fantastic, right? Every rupee spent to build an asset has a multiplier, because suppose there's a road being built. There'll be material, there'll be contractor, there'll be labor, there'll be food for them. So every rupee spent has a multiplier of 3 or 4 rupees, which means the economic activity increases by that much. So what this finance minister has done is that she has really pressed the pedal on capital expenditure, which is, I think, a great thing. So look, managing 1.4 billion people is not an easy task, especially when the tax-paying middle class is very tiny, right? So she's done a good job. She's accused of this whole popcorn nonsense, right? I just want to take this 1 minute, like, it's just hear my argument out. Direct taxes are income taxes and taxes on profits. These are said to be progressive, that as you earn more, your tax rate goes high. Indirect taxes, which is a spending tax. When I spend, I pay sales tax, excise, all that. These are called regressive, because when I buy the phone and you buy the phone, we pay the same tax, no matter if you are rich and I am poor. So these are called regressive taxes. When we moved, so GST was a grand negotiation between the Indian states and the center, which is very positive. And because it's a negotiation, a lot of these taxes collapsed into this one GST, goods and services tax. We were anyways paying. It wasn't visible, so we didn't know. So we didn't complain. Now, dikhta hai to complain ho raha hai. Anyway. So these are policy things that everybody must understand. That was the time that a collective decision was taken to say, should the GST be a flat rate? 15% on everything. Whether it's this bottle of water or a phone or a luxury car or a loaf of bread. Okay? it is 15% flat.
Sorry.
Many countries do that. Policy decision was that we will build progressivity into indirect tax. What does that mean? Unbranded atta, rice, fruit, vegetable will have zero GST, which means things that people consume have no goods and services tax. It's zero. Branded atta and rice will have 5%. And ice cream will have higher. Luxury goods will have 28%. Okay, so you've built in progressivity into an indirect tax by classifying goods. The moment you set out on this journey, then there's a group of people deciding what is what, whether this is luxury or whether this is comfort, whether this is basic good.
It gets into a subjective space then.
It does. So if this silly popcorn has moved from one category to the next of salted to sweet, and in the definition the two have a different GST rate, it will change. So are we okay to have a flat rate on everything? One way the government could solve it is to say that all food, so just have two categories, food and non-food. Whether you're eating luxury food or atta, everyone pays one tax and everything else is 15%. I mean, that might simplify things. But given the system that she has inherited and been a part of, I don't think she can do anything much, because it's not that she's deciding. There's a GST council. Every state finance minister is represented on that. It's a collective decision. So she gets the flack for all this, and she has to, because, if you get the accolades, you get the flack. But I think we need to understand these deeper nuances. This is the GST story. So so let me tell you where this goes. So let's say we do a flat GST. I can only imagine different politicians saying, oh, everyone is now paying the same. This is terrible. So these are political negotiations, political landmines. But given, and not for a moment am I saying the GST is an efficient system. I am equally frustrated by it. But this was the negotiation, and this was a decision reached, which was a collective with the states.
What is the alternative?
Like I'm saying, you can have a flat GST on everything. The minute you do that, you will have accusation of the government being pro-rich. That you are charging everybody, right from a poor person, for a simple thing like, a consumption good versus a car, luxury car, the same 15%. Suppose a simple non-smartphone, feature phone is at 15% and a luxury car is at 15%, what sort of political arguments do you think you will hear? That this government is pro-rich. So these are not easy decisions to take in a country as complicated, as diverse as India.
Why can't we be tax-free like Dubai?
What does Dubai have? You tell me.
As in?
What does Dubai have?
It's a place where people are consuming a lot of luxury. And they're not paying tax on it. They don't pay tax on their income also, I think.
What is the size of Dubai? What is the...
Oh yeah, that way it's not comparable.
So let me give you another... let me give you another way to look at this. So there are, I think, 16 countries in the world which are either zero tax or very small. Some of them have natural assets like oil. And somewhere there is a relationship between being a tax-paying country and being a democracy. So if you see some of these countries which are tax-free, would you agree that they are not democracies?
Yeah, mostly they are not.
We know who runs them, right? The other tax countries have dictators. They're not pleasant places to live. Not the Dubai and the other, but there are other countries which are tax-free. Singapore's are different, but Singapore's like maybe one locality in South Delhi will be Singapore. It's a very different story. The problem I'll tell you what we have inherited. When we became independent, the West had already become wealthy countries because of whatever. Look, the history is history. Because of colonialism, because of resources taken away from other people. the primary reason for taxation of a country is defense. What is the primary role of government? Do you feel safe in your country? Are there barbaric hordes coming over the borders? No.
No.
Can I walk on here in Connaught Place on the road fairly securely? I can't do that in New York or London, right? Here, I'm reasonably certain I will not be knifed. Somebody may snatch my mobile if I'm being silly and holding, but I'm not going to be knifed on a Delhi road. Okay?
That's true.
What is the primary role of a state? To provide security to citizens. That is why you are taxed. Then as the West became richer and then the voting was given to women and the other lower class people, only the rich and the incumbents could vote earlier. Okay, so we've started off on a moral high by giving vote to everyone. And the pressure to become a welfare state started. What is welfare?
That's true.
That you start spending on education, health, social security. Their per capita income levels are between $40,000, $60,000, $70,000 per person. At a far lower rate. So today we are almost $3,000, but when we started on the welfare journey,
it was 2,000.
It was much lower. It was in a few $100s when at independence. I can't remember the number, but so we have started with the ask of a rich country to provide for all citizens with the resources of a deeply poor country when we got independent. Which is why the disproportionate burden falls upon this little sliver of population who is middle class and above. So that's why because it's a welfare state, it is redistributing to a swath of population which is actually very poor. So when you look at some of the schemes like the health scheme, the Arogya, what is it called? The
Setu.
5 lakh insurance cover, Ayushman Bharat.
Yeah.
It's been a game changer for people. It takes one medical emergency to push a family down into poverty. Not for a moment am I saying that it doesn't feel unfair. Of course, I have written saying how unfair it feels. The only thing I wish they would do, because taxation is something that we have to agree that we have to pay. The only thing is that not all of us who can pay are paying. That money is hidden away. So about 2 crore people pay direct income tax. Everybody pays indirect tax, but direct tax is about 2 crore people. What is the size of the Indian middle class? 74 crore households. Baki log kahan gaye? What happened? Where are they? So if there's an ask from the government for me is to just say, you have the big data, you have the information, you have the technology, please go after them. Don't harass me more. I'm already law abiding. When I go to buy something, I'm paying by card on my tax paid money. The person next to me is paying $1.5 lakh in currency notes. How is that? What has happened? We know this is not.
They put a
2 lakh.
a limit on
so then
that now.
2 people will come and they'll pay.
They'll find a way to do it. But do you think digitization of payment, this Paytm
Absolutely.
and all,
there was this famous thing now in Chennai. They found a chartwala with 40 lakh in his UPI account.
Yeah.
So there are doctors, there are lawyers, there are professionals, there are a whole lot of businessmen who are simply not showing their money. So go after them. Imagine the tax base if you start counting middle class. Okay, so half of those 74 crore are rural, you cannot tax agriculture. Can we increase this 2 crore people to 10 crore, to 15 crore? What then happens on the tax impact? On me, it gets less because now it's spread over a wider bunch of people. So my only ask right now is to say, do not be unfair to me because I'm law abiding.
And what about cash? Do you think it should stay in the system?
These should be personal choices that people have. Like, I can't remember when I used cash last.
But is it better for the economy when there's cash in the system?
No, I think the more digitization there is, the better.
That's better.
Yeah, because then now you have a trail, no? Who paid what, when, to who. That's how that person got caught. Like, you have 40 lakh in your UPI. You've been just, it's been, and now what he will do is he'll get several family members to open accounts. He will use different UPI.
That's true.
Yeah, but I think digitization is great. But with Digitization, we are handing over a lot of information to the government.
That's what I was going to say.
All that I'm saying is that use it for public good. Not to harass me, use it for public good. I mean, why do I have to, when I'm using my card abroad, you're still going to tax me because you want to catch 5 people, you will tax all of us
Yeah.
on this
20%, that TCS. Yeah.
It's ridiculous. Like,
Yeah.
why? Why are you doing this?
Why don't they take that back?
Sorry?
Because that got really heavily criticized.
No, that's right. I mean,
Yeah.
if you are incompetent that you can't catch these 5 people, so for 500 people, you're going to slap
true.
us with this tax. We're already hurting.
Do you think demonetization helped at all?
I think the aim of demonetization was to reduce cash in the system to catch it. But I think they did not understand the depths of corruption of agents who were able to convert all this cash through the banking system, through the use of smart accountants.
So they got outsmarted.
So there is big data with the government, there is disproportionate deposits. Again, why are you not going after them? So that was the intent of demonetization. I think to that extent, it wasn't successful. But digitization got a huge push during that time.
That's true.
Yeah.
Even during the pandemic, it got huge. You've said somewhere that if we don't control money, money will control us. What do you mean by that?
So when you see somebody being boorish on a flight or being obnoxious to a parking staff guy who's made a scratch on his expensive car, or to somebody who's just economically, socially weaker, I will just say the money controls him. He doesn't control the money. You've let money control your behavior. You should, as you get more, you should get like a fruit tree, no? Bent over with gratitude and humbleness. But if it makes you more and more arrogant, and then when you have the money, you have choices on what you do with it, no? How we earn and how we spend tell us who we are. Again, no moral judgments. That's fine, whatever you want to do. You want to put bad stuff into your body, inject stuff, like, sure, go ahead. If that is all that you want to do with your money, those are personal choices you're making. And at some point, it's going to be harmful for your own health.
That's true.
So these are very conscious decisions to take. That what am I doing to earn? And how am I spending it? What am I doing? Like, what is it making me?
Eventually, that choice has to be made after you make the money.
What is this money that I have? What is it making me do? Am I becoming better? Do I like myself better? Or do I not? I think these are individual journeys.
Also, now the budget is going to be announced soon.
Yes.
What are your expectations from it? Do you think it'll be similar to what has been done in the past? And your main money trends for 2025, so to speak?
Yeah, so, there's very little that you can actually do in a budget. There's just a few...
as you said, the problem of legacy.
So there's a few hundred. So defense money has to go. The subsidies have to go. The government salaries have to go. The health has to go. The interest payments have to be made. So almost 90% of the budget is done. You just have to tinker with it. It is in this 10 to 15% of the budget where some choices have to be made. So I can only think that at this stage of where our economy is, they need to really boost consumption. Consumption gets boosted by putting money in people's pockets.
How would they do that?
Look, so obvious way is to reduce tax on people. But then remember, the tax-paying middle class is very tiny. The non-tax-paying middle class is very large, and they consume a lot of the white goods, the mobiles. So I don't know, find a way of maybe giving a tax break on consumption of certain goods to say, if you are buying 1, 2, 3, 4 things, so that's why they give a tax break on building a house, no? That you get to encourage you to do that. So maybe there's a list of things, and again, very difficult to implement this spending tax break. But they have to do something to boost consumption. So that is one ask, that you have to get more money into people's pockets. The second is simply, and I don't know what the budget can do, is just please get other people also to pay tax. Why just this little 2
Yeah.
crore
Why keep
out of
burdening them?
1.4 billion people. Why just me? Let everybody, and we are 74 crore households who are middle class. So let them all pay tax, no? That's my ask.
Yeah.
Yeah.
And your main trends for 2025, that something to watch out for in terms of investment. Again, you'd go
No,
with
so
mutual
I
funds.
don't actually, I just say that do nothing different. If you're on a plan,
Yeah.
basically it should make no difference which year you're in. You just carry on. If you are not in a plan, read Let's Talk Money, start your plan, and then
That's
just
on my
follow it.
agenda now. I'm
Yeah,
gonna read it.
absolutely.
Yeah.
Because it gives you sort of a roadmap. And you stop watching the market, you stop looking for tips. You just, it's like you're in a very nice place where it doesn't really matter because you've got a plan in place.
It's true, right? That women, there's a big difference between financial, I don't know, competence or just basic financial literacy between
Yeah.
men and women in India.
Oh, yeah, yeah, yeah. Women typically are brought up to not bother their pretty heads about money. Part of it is in business families, so that they don't know what assets there are, so they can't ask for it. At the time of marriage, dowry or whatever you call it is her share. So if she doesn't know what the assets are, she won't ask for her share. Even by law, she's entitled to it. And the other is just the traditional roles in families where the boys are supposed to be the managers of long-term money.
And
So
women
the
are supposed to
household money women would manage. So yeah, shopping is, the whole social thing sort of frames us in a certain way, which is unfortunate. But the day that a woman onboards financial independence, so even a woman who is not working outside the home, she's working in the house. She has full right to know what the assets are built during the marriage and in whose name they are. So not assets before, but during the marriage, those assets are half and half. So it's extremely important. Like I say, you have to put on your money oxygen mask first. These are very difficult questions to ask in households.
That's
You have to begin.
uncomfortable.
Yeah.
And also you come across as very
gold
money-minded,
digger.
which is not a good
A
family.
gold digger. So why do the Indian women are very smart. Why do you think there's a whole fixation on gold and all that?
Yeah, so traditionally they've had their little,
So if you are a
nest
woman
egg.
who's given up on gold and not onboarded mutual funds and other assets, you're in trouble. At least they had that. They were smart enough to do that. So if you don't have that, you should know what part of the assets are in your name. You need hard assets. Silk saris are not assets. Some XYZ company bag is not an asset. Though some shoes are not assets. Okay, so women get diverted into buying these fripperies, calling them assets. They're brainwashing you. Assets is something you can sell and eat from.
The Birkin apparently is.
Oh God, let me not get started on that.
Any money myths that you want to bust?
It's not that difficult. You just need to do this in a planned manner, stay away from fear and greed, treat it like learning a new language. Because once you learn the money language, it's yours for life. Money is a decision you have to take for your entire life till your last breath. After that, it doesn't matter. But till your last breath, money is your one true friend. So look after it, learn its language.
Thank you so much, Monika. It was such a lovely conversation, and I'm definitely getting on those books now.
Thank you.
And we hope you come back because
Definitely.
I'm sure we'll get a lot of questions now. Whatever,
Sure.
if you have any questions for Monika, please write in to her directly. I think you
mail me at monikahalan.com.
Yeah, and we hope to see you again soon.
Definitely. Happy to. Thank you.
Thank you for watching the Statesman Talk. If you like the episode, do not forget to like, share, and subscribe. All our socials are listed below.